So can you remind me what the password is again?
It's HILB 2705.
I ask you to put that to your time.
Okay. This
Mhm.
okay?
Yeah, okay, okay. This should capture the audio. Separately as well. Testing, all good. Right, thank you for your patience. And let me just pull up my questions. Hi, my name is Darren, and I'm with HTJ Tax. We're the team that seeks to demystify the sometimes confusing world of cross-border taxation. And today we have the honor and the privilege of having a conversation with Mr. Hervé Israel. Hervé, would you care to introduce yourself to those who don't already know you?
Yes, my name is Hervé Israel. I am an international tax lawyer. I am French, as you can see from my accent, and I have set up my own firm in Dubai recently in last October, and I am a specialist, as I said, of international taxation for high net worth individuals and for large corporations as well.
Fantastic. So you're based in Dubai,
Yeah.
or you go back and forth. And your specialty is French international tax. So in terms of foreign clients that are moving to France, what type of clients do you typically see going into France?
When you say moving to France, I think you mean those people who choose France not for professional reason or not for family reason.
Sure, yeah.
Those who are willing to come to France for the country, for its benefits and also its inconvenience. I don't see many people willing to move to France because of the taxes, because of the social security charges, which are quite high in France. Planning before coming to France is very important. But I would say, to make it simple, if you have the possibility to live on your savings, to live on your capital. So, I mean, you don't receive high income in France. If you don't have any succession issues, and if you don't have large real estate ownership in France or outside of France, maybe it's good to come to France, because in that case you will not pay income tax. You will not be liable for income tax. You will not pay succession duties, and you will not pay real estate wealth tax. But if you are a high earner, if you have succession issues, and if you have a large portfolio of real estate in France or outside of France, I think you should think twice before coming to France, because you will pay a lot of taxes.
So in your area of practice, you see people highly driven by taxation in terms of where they're going to go. Taxation plays a huge part.
Yeah, sure.
Okay, gotcha.
We have seen actually the other way around. Many French people coming to Dubai for the tax environment, and we are not seeing many people coming to France right now, except for professional reason or for family reason.
All right, gotcha. So generally speaking, how does one become tax resident in France?
Under French tax law, you become a French tax resident if you meet one of these criteria. Your main place of abode is in France. It means you have an apartment in France and you live there with your family, to make it simple. Second criterion, you live in France more than 183 days. Third one, you carry out a professional activity in France, and this activity is not accessory. And final criterion, you have your main source of income in France, which is the Centre des activités, des intérêts vitaux in France. If you meet any of these criteria, you will be regarded as a French tax resident by the French tax authorities. Now, as you know, we have a tax treaty which can apply different principles, but this is the main rules applicable under French domestic law.
Okay. So as you said at the beginning, the main categories of people you see moving to France are those who are moving for business, professional reasons, or for family reasons. In terms of how you counsel them in terms of pre-immigration planning, what are, let's say, the 3 most important strategies for them to consider before making that move?
If they move for professional reason, it will be difficult, but to try to have deferred, to have the possibility to defer the income when they will leave France, in order to reduce their income tax liability, if they can, to reduce their portfolio of real estate, if they can, unless this portfolio of real estate are mainly funded by bank debt. In that case, it will reduce the real estate wealth tax, and also to take care if they are old enough or their succession issues before coming to France, because in France you may end up paying 45% on the asset that you transfer to your family. So that's you never know where you are going to die, for sure, but if you can plan for that, it can be.
Right. So just to be clear, structures that work in other jurisdictions like trusts and foundations, they don't necessarily work in France.
Trust, no, it doesn't work now, because since 2011, French government has introduced some reform of the taxation of the trust.
Mhm.
First, trusts are not recognized under French law.
Yeah.
And in the past, since they were not recognized, there were some loopholes
Yeah.
regarding the taxation,
Mhm.
and we use them a lot in order to avoid mainly wealth tax and real estate wealth tax, to avoid some succession duties as well.
Mhm.
But now this is clearly impossible if you
Mhm.
comply to law,
Of course.
for sure.
Mhm.
And you would be subject to all the taxes applicable as if the trust do not exist.
I see. Okay. All right. So we'll come back to that later.
Mhm.
But what about you mentioned in passing the forced heirship rules in terms of estate planning. I mean, I know it's a broad topic and it really depends on the situation, but what are the tools that one can keep in mind that may be helpful in avoiding those forced heirship rules?
Those, excuse me?
Forced heirship.
Forced heirship.
Yeah.
Yes, but forced heirship, trust can be useful.
Okay.
Because in the trust you decide you appoint the beneficiaries, and the beneficiaries could be anyone.
So this would be for assets outside of France.
Assets outside of France, for sure.
Okay.
But because assets which are in France, they will be known by the French tax authorities, and it will be much complicated.
Sure.
But to be analyzed on a case-by-case basis.
Mhm.
Life insurance wrapper could be
Mhm.
used as well, because as again, you appoint the beneficiaries. So I would say that trust could be a solution if you want to. Because forced heirship, I don't know if the people who are listening know the extent of the rule in France. This rule is aimed at protecting the children.
Yeah.
And therefore, if you want to disinherit your children, it's quite complicated. But you have still the possibility through a trust and through insurance life wrapper to appoint other type of beneficiaries. I will not say that it is foolproof, because we can assume that the children could claim that the law has not been properly applied, and that the trust has been used in order to reduce their right to the inheritance. But legally, that's still possible to use these tools.
Okay.
And you have also the possibility just to make a gift during your lifetime.
Yeah.
And nobody can prevent you to do that.
Okay, so lifetime gifting, trust, particularly for assets outside of France, and insurance wrappers. When you say insurance wrappers, do you mean PPLIs or assurance fees?
Assurance fee.
Okay.
Assurance.
Okay, gotcha. Yeah, we'll come to that. Actually, that's actually the next point. So can you talk us through what exactly is an assurance fee and how it's treated from a French tax perspective?
But assurance fee is a kind of it's a financial product which allow you to transfer part of your savings that you have funded into the wrapper to the beneficiaries of your choice. In France, the life insurance wrapper benefit from a specific tax regime. Depending on the duration, if you kept the life insurance wrapper more than 8 years, you will benefit from a reduced rate of taxation. And also you will benefit from a reduced rate of taxation for succession duties. So during the life of the insurance life wrapper, if you take some money out after 8 years, you will benefit from the reduced rate of taxation. And if you die, the beneficiary would also enjoy a significant reduction of tax liability compared to the normal rate applicable.
Of course, health warning from a US tax perspective. sometimes they can be tax inefficient depending on what's in the insurance products. If you have any sort of mutual fund or ETF, some sort of unit trust, a collective investment vehicle, it could be taxed from a US point of view as a PFIC, a passive foreign investment company, which we handle in other discussions and other articles on the website as well. Moving on, could you talk a little bit about the contribution sociale généralisée and the contribution pour le remboursement de la dette sociale?
Yes, both are contribution would have been set up now more than 20 years ago, 30 years ago, in order to fund the social security in France and to repay the debt of the social security bodies in France.
Okay.
When they were implemented, both were quite low, 1% or 0.1%. And now they reach the total maximum amount is 17.1%. So it's quite high. It's applicable to income, investment gain, all type of income, and the rate can move a little bit higher than, depending on the nature of the income. But this is something which must be taken into consideration, because generally you think of the income tax rate, which is quite high already in France. For example, it's the maximum rate is around 35% for salaries, for example, and then you have to add there's 17.1%.
Wow!
So it increases a lot the taxation rate of income in France.
Just generally speaking, there's no legal way of avoiding that.
No.
It is what it is.
It's very difficult. Even if you sell a secondary residence in France, you have to pay the capital gain tax, and you have to pay the social contribution. And even though if you own the secondary residence for 22 years, you are exempt from capital gain tax, but you still have to pay the social contribution. And it's only after 32 years that you are totally exempt for secondary residence.
Wow. Okay. The good news, if there's any good news, is that from a US point of view, ever since 2019, the IRS has allowed for it to be treated as a tax, which means that it can offset any US liability. So you get foreign tax credits for it.
Which is
Next point. As a tax resident in France, are you required to declare bank accounts or financial accounts outside of France?
Yes, you are under the obligation to declare any bank account held by a foreign institution outside of France. Good news is you don't have to report the amount on the bank account. You just have to declare the detail of the bank account.
Okay, so like the account number, the name, address of bank,
and
stuff like that. Which is, of course, less intrusive than the US FBAR requirement, which requires the maximum balance for the calendar year.
We don't ask for it.
Okay, and that includes financial accounts. So, for example, if I had I bought some sort of ETF or fund in another jurisdiction, that's
life insurance,
life insurance as well.
Okay.
So that's
it's quite large obligation on a case-by-case to be reviewed on a case-by-case basis.
And what are the penalties for non-compliance?
Well, you have it's a kind of forfeit. It's a fee. I think it's around 1,500 per account and per year. So at the end, euros. So at the end, it could make a lot of money if you forget.
Okay, so
to declare.
Very important.
Yeah.
Okay. Well, you've also touched on the next point. The life insurance policy is held abroad, but this would only be if there's a cash surrender value or any life insurance policy.
Any life insurance policy. I don't think that the French tax authorities will enter into too many details.
Oh, I see.
If you want to be on the safe side, if you have an insurance, life insurance policy, it's better to declare it. But well.
Okay. All right.
it's not something which is easy to control by the French tax authorities, and so you can maybe forget one, but that's it.
Okay. And we touched on it earlier, the handling of foreign trusts. So we know that there's no tax advantage to it. No tax, because everything still needs to be declared, it becomes transparent, and you're taxed on whatever the income or the assets, if it is a wealth tax is being triggered, it offers no tax advantage, but
income distributed by the trust, if it is income capitalized in the trust and it is not distributed to the beneficiary, there's no taxation.
Oh, I see, so you can achieve tax deferral.
From that, yes.
But there will be an onerous reporting requirement, right?
Yes,
So
you have to report every year
everything.
the value, the market value of the assets in the trust and the income generated by them, which has been capitalized in the trust.
Right. So the tax authority in France would know that income has been gathering within and it's not being distributed to you.
Exactly.
Okay.
It's a way for them to control what happened. Because it can go up and down.
Okay, and is there any difference in the treatment or how the income is taxed if it's taxed in the year in which it is earned versus when it's deferred and distributed further on?
Usually there is a kind of, it's a gray area. Because, in the tax code, we have a provision which says that any distribution should be taxed as an investment proceed, so which is taxable in France at the rate of 30% roughly. But we have another provision which claims that any distribution should be treated as a donation if the settler is still alive, or succession subject to succession duties if he died, he has died. So and the rate is much higher, it's 45%, more or less. So there is a gray area, and you have to take into consideration that it will be very complicated to get a tax credit for any taxes which have been paid by the trust on the income generated by it, especially in the US, or the trust is subject to tax, or beneficiary, the US ex-resident can be subject to tax as well.
Okay, so there are two aspects to that. So there's what we call in the US a grantor versus a non-grantor trust, right? So if it is a grantor trust, it's set up by someone and it's revocable and that person is still alive, right? Then in a way it can be treated as a gift, so that person is giving you a gift, right? And in that scenario, would the gift incur any taxes?
It is treated as a gift in France if there is a distribution.
Okay, right.
Or if the settler dies.
So
when it is, as long as it is not distributed, it remains within the trust under the responsibility of the trustee. There's no taxation in France.
There's none. Okay, right. Once a person is still alive.
But I know that from my experience with the US trust, that if you have a grantor trust, the settler is subject to tax in the US.
Exactly.
And if it is a non-grantor trust, the trust is subject to tax in the US.
Perfect.
So these taxes, which would be paid on the income generated by the assets of the trust, these taxes will not form a tax credit in France.
Okay, so I get the tax credit, but if the person is still alive and the trust is revocable, or what we call a grantor trust, would any benefit or asset or income that is distributed from that grantor / revocable trust, person is still alive, to a French tax resident, does that incur any taxes in France?
Yes.
Okay.
For sure. Any distribution will incur taxes in France.
Okay, gotcha. All right, so that's the first angle. Now the second angle, again, just to clarify, there's no difference in how it is taxed, whether the income is distributed in the year in which it is earned versus accumulated and distributed later on.
But it's the issue, it's the gray area that I was speaking. We don't have clear guidelines on this from the French tax authorities, and we don't have a case law as well. So complicated.
Okay, Gotcha, okay. Foundations, how are foreign foundations treated in France?
We don't make any difference between
Okay.
trust and foundation.
Okay,
The only difference is with what we call public foundation, which are recognized by the Conseil d'État in France, what we call fondation d'utilité publique,
all right,
which can benefit, we can enjoy some tax benefit, but private foundation, some treatment.
okay, same as trust,
Yeah.
it's declaration, taxation,
Exactly.
etc. Okay, gotcha. What about the taxation of US pensions by tax residents of France?
Under French tax law, it's very easy. Huh? If you are a French tax resident, you are subject to tax on your worldwide income. So that's the main point. Then you have to look at the tax treaty. And for pension, I understand that the article of the tax treaty between France and the US state that public pension are taxed in the country of origin of the pension, which is also the case for France generally. So if you receive a public pension from the US tax government and you are a French tax resident, you should be only subject to tax in the US.
Okay, so I noticed your choice of the word public pension.
Yeah.
So that means you must have been awarded that pension in return for work to the state, not private sector.
Exactly. So you have to make the distinction between both. Because generally, and we have this with most of the tax treaties signed by France, public retirement pension are subject to tax in France and private one are subject to tax in the country of residence of retirement. So I think they apply more or less the same principle with the US, but this has to be, I have not had many cases of pension received by US tax, US citizen in France as a French tax resident, but that's the main principle.
Okay, and does that include Social Security as well?
What do you mean Social Security?
So we get a payout from the US government.
No, here I'm talking about income tax only, not Social Security.
Okay, but when you retire, having worked in the US, you get a pension for whatever pension fund you're paid into, and separate from that, you get one from the government.
Yeah, but the one from the government clearly is subject to tax in the US.
Okay, but not in France.
No, not in France.
Okay, so it is the private arrangement that may or may not be.
Yeah, exactly. But you have to declare it in France, and it will be either exempt or there will be a tax credit. Something to analyze on this.
Okay, gotcha. All right, another question that we get asked all the time is if someone is French tax resident and perhaps they're an auto entrepreneur, they're self-employed, and they have clients outside of Europe, so for back home in the US, when they're doing their invoicing, should it include VAT?
You mean it's a French resident?
Yes.
Invoicing
The clients
in the US?
Yes.
No VAT in that case.
Because it's outside of EU.
Outside of the EU.
Okay, it's easy.
It's very clear.
Okay. Okay, you mentioned in passing the wealth tax. Could you tell us more about it and perhaps some of the ways in which one can legally minimize it?
Wealth tax, is not the right word, it's a real estate wealth tax.
Real estate.
So in the past, before 2017, we have a wealth tax which was applicable to any assets, real estate or non-real estate. And since 2017, it's limited now to real estate assets, after taking into consideration bank debts.
Right.
In the past, it was possible to put any kind of debt, but the law has recently been hardened in order to limit the possibility to reduce the basis of a real estate wealth tax by deducting debts.
Right, general debt.
Yeah.
And so bank, you mean a
third party financing.
Okay, right, third party.
Yes,
Okay.
it must be a real third-party financing because one of the game in the recent
Yeah.
past
Yeah.
was to have infinite bank loan.
Yeah.
So it was you never repay the bank loan, so you can deduct it from the basis of your real estate value, and you never paid real estate wealth tax. So this loophole has been closed.
Okay.
So now there is always the possibility to deduct the bank debt for sure, but there are some strict rules which are applicable to avoid any excess of playing with the figures.
Okay. And what if you hold the foreign real estate through some sort of structure? So for example, you hold it through a limited liability company or
it doesn't change anything.
Doesn't matter. Okay. And what about if it's a REIT, a real estate investment trust?
Real estate investment trust?
Yeah, REIT.
REIT, but I don't think it changes anything because you own, in the end, you own, for a French resident owning a real estate investment fund, we have some type of structure like this in France, I think. So, but they are not exonerated from real estate tax. What is exempted is if it's commercial building, if it's some type of building used for operating a business. Because if I was the owner of my office and I would not be subject to tax on the value of the office because it's part of my business. But otherwise,
no way. Okay.
No.
Okay. Gotcha. And could you talk a bit about the tax on gratuitous transfers, the MTG tax?
But the DTMG tax is a succession tax or gift tax.
Oh, okay.
It's taxes that you pay when you die or when you pay when you die, you are died, so your beneficiary and your children pay for these taxes when you die, or if you make a gift, you also pay these duties. And as I said before, it's between 45% to 60% more or less. So the rates are quite high in France.
Right.
It's not like in the US where you have exemption until $12 million. So I'm familiar with that. But in France, the exemption is much lower.
Is there any way of legally structuring away from it, or it's unavoidable?
No, there are some way because in France, you have a principle, you have to pay a high amount of taxes. But since the taxes are so high, the government is always obliged to invent rules which allow to pay less.
Okay.
So if you are the owner of a large company like Bernard Arnault, or you have a possibility, even company which are less well known. I mean, there is a possibility to avoid 75% of the tax with what we call the loi du travail, which allow legally to avoid 75% of the succession duties or gift duties if you meet some conditions. Okay. So there are always ways to avoid these taxes, but you have to plan for that before you die. Yeah. And it's easier if you have a large succession than a small one.
Okay, so it applies to transfers whether it's gifting while you're alive or upon your passing years. Okay, okay, gotcha. All right. Company formation. I know that is a whole topic in itself. It could take hours, but generally speaking, what are the most popular organizational types in France?
As in any other country, where we have what we call a transparent entity, like LLC in the US. In France, it will be SNC or it will be SCI, which are tax transparent for tax purposes, which means that the taxes are paid by the shareholders and not by the company. But this company have some drawbacks. You have an unlimited responsibility. And joint responsibility, some of them. So it is not adapted for all type of transaction or operation in France. And we have what we call the the corporation, SA, SAS, which are subject to tax in France, which are tax resident in France, and we enjoy the benefit of the tax treaty. So it really depends on what you want to do, but it's true that SCI are used by French tax residents to hold real estate, and to conduct business transaction. It's maybe better to have an SAS because it's quite flexible.
And you get the liability protection.
Yeah,
right?
exactly.
Right, and from a US point of view, of course, it becomes very nuanced. So the SCI under certain circumstances can be viewed as a trust, maybe from a US tax perspective, but definitely an SAS, we report that as a foreign company. So, okay, it is very interesting. And the process for company formation, is it quick and friendly, or is it a little bit bureaucratic?
No, it has improved in France. Once you have all the documentation, I would say that in 15 days you can have your own your entity incorporated. No, we have some improvement that we've made for that.
Okay, 2 weeks, that's not bad.
No.
And can a foreigner incorporate a French company? Or do you need,
No. It's totally free. You can be a foreigner.
And you need a local director or resident director or equivalent?
It's better to have local director, but you can have non-local director as well.
Okay, very interesting. Okay. And let's head in the other direction. Let's talk about leaving France, unfortunately. But the French exit tax, is there such a thing? If so, how does it work?
The purpose of this tax is to allow the French tax authorities to know that you have left the country, first, and second, to tax any capital gain which could arise if you sell the shares in the company you own once you have left France. So this tax, you have to declare the value of your investment in France at the time of your departure, and the tax authorities, if you go to a country within the European community, it's very simple. You just declare the value, and that's it. You have nothing to pay, and it's okay. If you go outside of the EU, you have the same process, but you have to provide a kind of guarantee for the payment of any tax which will be due if you sold your investment when you have left France. That's the purpose of the tax. You don't have to pay for anything upfront, but you have to provide some type of guarantee, which would be a bank guarantee, which can be you give your shares, your small shares, to the tax authorities in order to cover any potential tax liability.
Okay, I understand. So it's more of a guarantee, and this is of French Citus assets only, French shares. So if I have shares in Microsoft, it doesn't concern.
No, normally it doesn't work unless the tax treaty gives the right to France to tax these shares. So it depends where you are.
Okay, no, all right. So just to be clear, so you're a French tax resident, you decide to leave and you decide to go outside of the EU. So an exit tax is due, so like a deemed liquidation of the shares you hold.
Anywhere
in the world?
Yes.
Oh, I see. Worldwide, okay.
Yes.
Oh.
Because otherwise you would have been taxed in France.
Right, okay. Oh, yeah, that could be pretty onerous. Especially if you got in early with a company and now it's gone very high. Okay.
Well, your portfolio must exceed 800,000 euros, so it's not so high.
Yeah, okay. And there's no arrangement that can minimize that.
No, but you don't pay anything.
Until there's a liquidity event.
And after 2 years or 5 years, depending on the value of the asset, it's finished. Exit tax is not applicable anymore.
Oh, okay, so you just need to hold on to it for the 2 or 5 years afterwards. Okay. It's not so painful.
It's something which is manageable.
Right, okay, just don't sell.
Exactly.
Do you expect any, I know you don't have a crystal ball, but do you expect any future changes in the French tax regime, especially since, as you mentioned in the beginning, it's known for being relatively high?
From what I see, issue that we have, and it's the same issue in the US, is the deficit of the budget. So I fear that taxes, the rate of taxation can still be increased, even though I think we have reached the limit. And second possibility is an increase in the wealth tax to include again the financial asset.
Right, yeah.
And some of the opposition in France would like to
go backwards.
To go back to the old wealth tax.
Yeah.
And this is popular because most of the people do not pay for it. So it doesn't cost anything to say that you are going to tax the rich, as they say in France. And I fear that the situation will not improve. And I don't see a new way that the situation can improve because of the high deficit of the budget.
Okay, well, so
I
that
don't
is
see any
something to be
improvement
aware
in our public finance. I don't see any reduction of the expenses of the government. They always increase and their expenses, and you have to increase tax. They believe that the best way is to increase the taxes in order to cover the expenses, which is a wrong statement, I'm sure, but that's it.
to be aware of, okay. And moving on to the so-called blacklist or the list of non-cooperative jurisdictions. I know there'll be two, right? There's the EU one and there's the French one.
Yeah.
Could you comment generally on them, please?
Yes, the French one is more or less the same than the European one, and actually the European one is taken into consideration by the French one. It's a way to deter people to have a company in tax haven, in some tax haven which are not cooperative, i.e. it means that they do not exchange information. So it's quite limited. It's country like Vanuatu, Turks and Caicos. It's mainly islands. But we have now still the Bahamas, which is quite used by US citizens. But it's really quite marginal country. So I don't, well, the cost of dealing with them is you will pay high withholding tax, 75%, to distribute dividend to a company set up in these countries. So, well.
And there'll be CFC rules as well. So if they...
Yes, for companies, yes, we have CFC rules. And also for individuals, actually, we have CFC rules. And
so there's no income deferral in those. Everything has to fall out.
Exactly.
Okay. And I guess also banking would be quite difficult.
To open a bank account of this entity in France, yes.
Very difficult. Okay, gotcha. Do you think that there's a rush of wealthy people leaving? I mean, I know it's hard because we have no statistics in front of us, but just anecdotally from within your network, do you see a lot of people leaving, probably not just France, but Europe in general?
Yeah, I network individuals really have already left. It's not they are leaving, they have already left. Many have left. But what we see, which is maybe more important, is a young entrepreneur, start-upper. And here in Dubai, you have plenty of them. And it's not only the wealthy who are leaving, it's also the young people who are leaving because they think that paying so much tax and the system doesn't work anymore. Because if you go to a French hospital, you will not be better treated than here, than worse than here. So they don't understand why they should be obliged to pay so much for so little. And I think that, well, I am not optimistic for the Western world if it continues to increase the taxes and do not offer anything in exchange.
Okay, so how do you see, I know you say you're not optimistic, but how do you see things eventually evolving in the larger Western world?
I think there will be a point where you get Margaret Thatcher. Because when the system doesn't work, you have to go back to
Right, right,
to the good old days.
yeah.
And in the US, you got Reagan at one point,
Mhm,
when nothing was working well.
mhm.
So I think there will be hopefully there will be a
Movement to the right.
yes,
Yeah.
a movement to the right, or to not only to the right, but
Mhm.
to politicians who are able to say, like in Argentina now,
Yeah, yeah. Mhm.
stop,
Yeah,
the system doesn't work.
yeah, yeah. Okay.
So it's my hope,
Mhm,
but I'm not sure that it will happen because we don't know, and
mhm, mhm.
there's no. I don't see any good reason to be optimistic at this stage.
Mm, okay.
And I think the world is also moving. We see here, Middle Eastern,
Mhm.
10 years or 20 years ago, nobody would have come here.
Mhm.
And now just have to come here.
So what is your outlook for jurisdictions like Dubai in the Middle East?
If they don't make any mistakes,
Mhm.
because it's easy when you are successful, you make mistakes.
Yeah. Mhm.
And they've been very successful, and now they have
9%.
implemented
Mhm.
corporate income tax 9%, which is not very high,
Yeah.
and we don't know if they will be effectively implemented.
Mhm.
But you see, if they implement as well an individual tax system, they will lose some of their advantages.
Mhm.
I know that there is a lot of pressure from the OECD and
Mhm.
to push them
Mhm.
to,
Mhm.
to implement a system of taxation.
Mhm.
But if I was in front of a Czech of here, I would tell him, you have built everything here without any tax.
Yeah.
Why are you going to do that
Mhm,
now?
mhm, mhm.
Don't try to please Europe, because Europe is like that.
I guess going back to the point raised earlier, it's hard because if you're on a gray list or a black list,
Yes, it's an
Yeah,
issue. So
it's an issue.
they try to be outside of this gray list and blacklist, which is the case of the UAE. They are outside of the.
Mhm.
They are not in this list,
Mhm.
so it's okay. But they comply with some obligation regarding fighting terrorism funding or
Mhm.
fighting tax fraud. Maybe
Mhm, mhm.
that's good, but then you have to strike the right balance
Mhm.
and not trying to copy the system which is not longer working.
Okay.
That's my
Yeah.
philosophy.
And given where we are here in Dubai, it is the philosophy of many people, which is why they're here.
Yeah.
So, but having said that, again, it's anecdotes, no stats. I see so many of wealthy US clients wanting to move, particularly not just to Paris, but the South Riviera. It is a romanticized.
Yeah, it's good.
Yeah.
As I told you before, if you have no succession issues and you can live on your savings, you will not pay tax. And then you are and France is a wonderful country.
It is. Hervé, thank you so much for your time. We appreciate it.
Thank you.
Thank you.
Aaron.
All right, so I'm just gonna shut down everything.
Was okay?
Yeah, it's wonderful. So I can turn this off.